Traders, we have a monster week this week with some of the fundamentals coming out on Friday, the Jackson Hole Symposium. All right, we're going to be talking about that. And structurally, I still want to do this GBP buy. All right, so let's roll the intro and we'll get started with the Monday market breakdown. All right, traders, what's going on, guys? Let's get this breakdown underway. All right, we're going to be covering August week 3. And then we got August week 4, and then it's Q4. Okay, so this year is literally flown by, all right? So let's make sure that we kill it this third quarter and end it profitably, okay? So if you guys haven't been caught up with the breakdowns and, you know, what I've been looking at for the month of August, we've had 2 breakdowns thus far, okay? So I'm going to tag them below. And again, if you're kind of new to the community, the top trader community, then I'm going to put the link below so you can get inside the rookie course and kind of get a gist of how we trade, all right? So other than that, folks, we have had it's going to be a pretty interesting week, all right? So we got the Jackson Hole Summit coming out on Friday, an annual event where all the heads of the central banks come together and just spiel out and jawbone the markets, okay? So that's what we're expecting. We're somewhat expecting Draghi to potentially talk down the euro. And we're hopefully expecting Yellen because at the last conference, we know that there was a split. Okay, we talked about it last week in terms of the FMC kind of being, split more or less 50-50 between a hike coming in this year or a hike coming in early next year. When I'm talking about a hike, I'm talking about an interest rate hike, okay? So we're just going to have to see how she's going to come about, preluding to economic strength because that's what we want. And that's what she wants. Okay, so she is actually on the side of having a rate hike in December. Right now, it is very improbable that we're going to have a rate hike in September, but it is looking like we're at a 75% chance when you look at the Fed fund rate that we're going to have a rate hike in December. Okay, so that is very interesting. And if we have that hike, then again, we can prelude to some U.S. strength. But remember, the reason why we might not have that hike and we're a little bit skeptical as if we're going to have it or not is because if we heighten rates and we haven't hit off our inflationary targets, then again, that's kind of counterintuitive to the economic growth. So the problem right now that we're facing in the U.S. economy is that we are really almost at full employment, okay? We're at 4.3% unemployment, which means that really everybody's got a job, all right? I don't care if it's at Arby's, okay, at Chipotle, everybody's working somewhere, all right? So with that being the case, usually, again, we are at full employment, you're seeing inflation tick up, but we haven't. Okay, so that's the problem. Inflation isn't increasing, but we're still at full employment, so it's like, okay, what the hell is going on? Again, we talked last week about some of the things fundamentally that is also weighing down that inflationary uptick, okay? And again, this is why I want to get out with that fundamental video, which is coming this week. Thankfully, okay, it's already recorded and it's done, so you'll be seeing that drop as well, okay? So again, we're going to see what Yellen says on Friday. Right now, structurally, folks, we are at some beautiful structural levels to be catching some serious moves, okay? Right now, this euro, I'll show you guys a screenshot from the July low, okay, the beginning of the July to the August high, we are sitting right at a 23.6, and that's just one extension. Okay, if I give you guys the full extension from the year low to the year high, then I mean, man, we are really still hanging up in a pretty tight consolidation. It's around 220 pips wide, but at the end of the day, it's pretty tight. So we can definitely see markets liquidate. And what a lot of the individual investors and hedge funds are looking for is markets to sell all the way off to $1.14. You know, and we're trading intra-week and intraday, okay? So it's not like we're about to catch the full 300 pip corrective move down to the 14 flats, okay? It's probably going to be an extension, correction, okay? So that's how I plan to play it, all right? So, but outside of Friday's news, we do have a pretty stacked Wednesday and a little bit of some fundamental data coming out on Thursday as well, all right? So Wednesday, we got new home sales for the USD. And we got unemployment claims for the USD, all right? So that might give us some intraday volatility. Thursday, Draghi is speaking before the Jackson Hole Summit, all right, as like a preliminary talk. So he might jawbone a little bit on Thursday as well. So you're really going to have to figure out how you're going to play this week, okay? You can either wait till Friday, where most of your volatility is going to come about based off of what all the central bankers are saying on, during the event, or you can catch, again, some of the intraday move happening on Wednesday and Thursday, the intraday move. I don't think you should really swing that out. But here's the thing, okay, right now I'm looking at this pound, and pound is literally pushed around 40 points this morning. So I'm probably about to be triggered long in some of these things. So I might start covering some of my positions really honestly before Friday comes about. So we're gonna have to talk about that a little bit more in depth. During the technical analysis segment. Other than that, we do have a GDP release coming out for pound. Also, I think that's coming out on Wednesday, all right? So correct me if I'm wrong. Actually, I think it's coming out on Thursday, okay? And that's going to be major in terms of, again, some more intraday volatility. So that's why I do want to get exposed but I'm probably going to trade a little bit light and kind of see exactly how markets come about, and you guys are going to know by next breakdown. And if you're in top traders and you're in the top trader community, you're going to know throughout the week. Okay, so make sure you like and sub also. All right, and if you guys have any questions, just throw them down in the comment section below. Let's pull over into these charts and see if we make some money this week. All right, let's pull into the charts. All right, traders, let's pull over into these charts, man. So we're already at 18 flat on this Euro USD. Okay, so let's start off with that. We are really just kind of playing in the range, so that doesn't startle me too much. Now you are going to have some guys having some kind of entries around here at this 18 flat number, potentially up into the 1820s. Maybe they want to push outside of this range here, and maybe they'll probably take it up into the 19 flats. All right, 19 teens. Okay, so again, let's pull back, and I want to show you guys this overall structure that I was talking about. I know I threw some screenshots, but let's see it live in the charts. Let's start off here on this monthly. Again, you guys can see where we're at. All right, we've broken out of that 23.6. Okay, and at the moment right now we're pinging off right at that 38.2. Okay, and so we're maintaining that level. So again, this is why a lot of market participants, analysts, whatever you want to call them, are looking to start shorting this Euro U. Okay, now, and that's outside of the fact that fundamentally, okay, there are some problems with the high Euro right now. Okay, they don't really need a Euro trading up here in these $18s coming up into these $20s, which is why they want to see the corrective move down to where really back down to the base of this entire consolidation that we had in 2015, 2016. Okay, but mainly at the high of the base, which is the $14s. Now, again, I don't oppose that. I don't oppose that at all. But for us, on the retail side, we're gonna have to take breathers down into that level. And if you guys can notice. Again, let me go back over to the monthly real quick just so you can see it. Boom, we get our launch point outside of the structure here at the beginning of July, and then we close at the high of the range. So July really cleared most of that price action out. And I'm thinking that we're going to have a substantial retracement coming back in off of those July gains. So I do think that we're going to eat away some of July gains. And if I pull over and show you guys what that looks like on the weekly, here's our launch point right here. The daily looks a little bit better as well. Okay, so you get a pretty sound structural point at which you say, okay, this thing's about to start pushing out, and it's this low right there. Okay, so here's our low. If you pull up into the high, boom. All right, so we're now at another 23.6 retracement. Okay, and this is our top trader quintessential super strategy, whatever you want to call it. This is our bread and butter. Okay, we love taking cracks of this 23.6. All right, we don't see anybody else doing that, and we definitely think that there is an edge there. All right, so anyway, looks like they somewhat have. I mean, it absolutely can, but that's the good thing about, the way we trade. It's all based off of if then, all right? We're not going to start taking shorts down below this Euro U until we get down here into these 17 flats, as I mentioned earlier. Now, can we get an earlier entry based off of some kind of new structural formation? Definitely, right? I mean, if markets run all the way up into these highs, then obviously that would give us a different kind of short opportunity. I'm not going to wait for markets to come all the way back down to the 17 flats and then break lower. It depends on how markets form structurally, in the next couple of days. Okay, so right now, if you want to get in terms of some buy-side intra-week activity, like we were mentioning earlier, then it seems like all the profit potential that you're going to really want to have is outside of a crack right here at 18 flat. Okay, so boom, you break 18 flat, you can start taking profit up here at the 19 teens, which is around a 100 point move. So you have a fairly substantial move. It seems like you're kind of going to be dealing with something close to a 1.5 to 1 risk reward ratio, because it looks like you're going to have your stops down here in the 1730s. And that's if you get in, in the 18 teens, because if you want to get in the 1830s, then again, you're looking at more or less 100 point stops. So again, you're kind of pushing yourself back down to a 1-to-1 risk reward ratio. So depending on where you want your stops, let's say they go under here, you're at 75 points, and then the high, again, you're looking at highs at really right at flat 100 pip highs. This is what we're reading right now. We're reading 97. So again, that is a buy side opportunity that I may be looking at. Now, sell side, I would love to catch this thing sell side after seeing markets break the low. If we get some new kind of structure, if markets end up cracking outside of this level here, then I might be on an intraday buy side push, and then I might have a new idea after I take profit on that move. I might have a new idea in terms of where I think markets can go sell side for us before Friday, or really at Friday. Okay, so we're just gonna have to see if this Euro USD treks. we're going to take this USD Trex, okay? But we got both. We got the market pinned to both sides. If markets break higher here, then we're going to be taking it long. If markets crack lower there, then it's going to be we're going to be taking it short. I love the sell position more than the buy position, but you know, it's easy to make the buy side money if we get the push higher right there. So Aussie, we didn't talk much about Aussie because there isn't an enormous day for Aussie. As you guys can see, after last week, we broke this low right here. Okay, so this was a fairly large structural area that we were looking at. We cracked the low right there, and then we ranged right back up inside of that zone there. So if you look at Aussie on a weekly perspective, you guys can see that it kind of looks, again, more or less like the USD. So across most pairs, US dollar has gained strength, all right? If I pull over into this dollar index real quick, you guys will notice that it's really the last, we're at the last ditch effort for this dollar to not break that low. And this is why we're seeing a weakness across most pairs. So last night, actually, we had a little webinar, and we were talking about this 93.40 level. And we were saying, man, if we break this 93.40 level, you know, we got really two more structural areas that markets can hold. And man, if markets don't hold that, dude, it's not looking pretty. It's not looking good. It's not looking good. We'll definitely get, you know, pretty large runs of US dollar weakness on this, you know, across most of our pairs, because folks, I mean, that is the last ditch effort. I mean, we're literally sitting at, you know, 2015, 2016 lows. If we crack lower here, I mean, we're going to be heading down into, you know, 2014 lows. And a lot of that corrective move right here happened based off of the collapse happening in the in the euro. Okay, so this is what is giving most of our you know, opinion in terms of, hey, if we maintain the structure here, then we're going to have really nice USD strength coming across most pairs. If we break structure here, then we're going to just, again, have an enormous sell-off of most U.S. assets, and that's going to affect a couple of our pairs, you know, throughout the next couple of months and throughout the next quarter. Okay, so again, not really scrutinizing Aussie too much. All right, that was the Aussie right there. Let's take a look at pound. Pound is something that I really do like. All right, because we had, again, on the webinar last night, we were talking about this structural low right here, and I actually do have some traders in early on this pound push, because what we were looking at on Sunday night was basically, I said, hey guys, look, if you guys want to play inside this consolidation, you know, again, that's fine, but you just got to be a little bit careful. If you want to start taking buys, or you want to get in on an early buy, you will need a crack right here at 28.80, and then that's going to just pop you up into structure, and you can start liquidating once you get at the high of the structure, and that's what we've seen a lot of our guys do since we came right up into the level. All right, so obviously the nice, you know, more fruitful target, I guess you could coin it as, is markets coming all the way back up into the 129.60s, you know, 129.50s to the 130s. All right, so this little 50 pip range right here. And this is what I've been waiting for markets to go to for quite some time, all right? Because if you pull back on the daily here, you have a pretty decent looking channel pushing markets potentially all the way back up into structure. And this is the most strength we've seen on this pound, you know, in the past couple of days. Okay, so if you just notice the candle size here, I mean, we whipped back and forth on this day. But if we can break outside of this level here, man, we're clear straight running up into the 29.60s. Okay, and that's what I mentioned last week during the Trump trade video. All right, so that's what I'm looking for there. NZD USD is another pair that I really do like, where again, if we get that US strength weakness this week, we can really run this NZDU again back up into structure here. And so I was looking for a crack, honestly, and we're nearing it again. If we get a crack right here at the 73.40, 73.50s, then I think we're going to have a sheer straight run, at least back up into the 74.10s. And we may be able to come back up to the apex of the move right here at 74.70s. All right. So again, that's another move there. So pound, I love pound. NZD, I love NZD for in both of those pairs. I love for US weakness. Now, on the precipice of US strength, I was liking the Euro U. But structurally now, if we get new structural formations and we really do bust out of this range here, then, you know, it's still a really good trade, but we might, if we get the US strength, we'll just come right back down into the 17 flats, and we might get exhausted down there at that level. So again, if the Jackson Hole Summit commences and we're all the way up here at these highs, okay, before the Jackson Hole Summit starts, and then it happens, and then, you know, you're yelling, spewing out whatever it is you'll be spewing out over the next couple of, you know, minutes or hours, then you may have a corrective move back down to the lowest structure here. And if you do get a breakout, it's not going to be as strong because you came in from such a high. So the reason why I was loving the Euro U was because I was basically saying, man, if we can stay within this consolidation and the Jackson Hole Summit commences, I guess I was just rationalizing that, you know, by Friday we go nowhere. Then man, the structural break outside of this move is going to be fairly substantial. We can come down into this 50% level here, really honestly close to the potentially the 15 mids, 15 flats. But again, if we form this structure where markets come all the way up into this high, then we're going to get exhausted by the time we get down to this low here, all right? So we're just going to have to see how this Euro-U adds up and how a couple of the fundamental implications come out. It really does look as if we're about to have some strength in. I think I just heard myself get triggered into a GBP long. If the day keeps adding up, then I potentially might also be triggered now into this NZD long as well. Okay, so my NZD targets over on Oanda are probably up here in these highs. So I'm definitely gonna have to probably crank out on a video in the middle of the week. So guys, stay around for that. So make sure you're subscribed so you can get alerted that that video's out, and I'm gonna give you guys an update as to where I am. All right, in terms of these positions. Okay, but other than that, let's see what we get. There is a lot of, there's a lot of other pairs that have some pretty good opportunities. Again, GBP AUD is another situation where if we get some strength, we can easily, and it's a pound off of the GDP number that's coming out for the pound, we may get a crack back up into, the range there. USD CAD, we do have some USD CAD news coming out this week as well. And again, any kind of, weakness on CAD will either give us a crack higher, or any kind of strength on CAD will give us a crack lower. So you have a lot of room to run if you don't want to trade the pairs that I'm looking at. I'm just trying to stay focused and really kill it off on what I got here in terms of this NZD buy, this pound buy, and potentially this euro buy up until the news coming out later on this week. All right, so guys, again, your profit, I'm serious about this, okay, is always my motive. All right, if you guys have any questions, please let me know. Like and sub, and let's kill it this week, okay? Let's see what we get. I'll talk to you guys soon. Peace.